Let's quickly take a look at what the market is saying. Let's start from Monday. Of course, the market took off the week on a positive note, rising by 90 billion naira on Monday, May the 22nd of May 2023. Now, the all-share index traded about 0.35% higher to close at 52,369.13 index point against the previous trading section. Market capitalization was at 28.51 trillion naira on Monday. But if you look at Tuesday now, all-share index also traded went up by 0.48% higher than the previous trading day, which was on Monday. The market capitalization and its equity is appreciated by about 139 or 37 rather billion naira, closing at 28.65 trillion naira. That's about 0.48% gain compared to the 28.51 trillion naira recorded the trading section Tuesday. But if you take a look at Wednesday, what's the market? How did the market go on Wednesday? The equities market also furthered its northward trend, rising by about 0.58%. That's about 167 billion naira to defined rate hike by the Monetary Policy Committee. Now, the Nigerian Exchange Limited all-share index and its equities market capitalization increased there to a new reading of 52,621.19 point, and that brought the capitalization to 28.652 trillion naira. And on Thursday, you have the market recording the first decline of the week with about 0.90%, where you have all share index decline to 52,109.43 index points there. So that's it for you. But what's the market saying today? If you look at today's, which of course is the last trading day of the week, market gain about 0.29%, and you can say 0.3%, settling at 52,973.88 basis point there. So that's a quick look at how the market fared in the week. But let me start from Ambrose before I go to Oladipo virtually. Talk to us, what's your opinion? Despite the MPC monetary policy's decision on Wednesday, we still saw that the market perhaps maybe beat what analysts would call expectation because the interest rate was jacked up by 50 basis points to 18.5%. Yeah, so why do you think the market defied that decision instead of going the opposite direction?
Yeah, actually, let me just start. I'll say that it's a bullish market for the week preceding the inauguration day. You know, on Monday, by this time, Nigeria will have having another president sitting to oversee the affairs of Nigeria. But the good thing is that seeing market rallying toward this inauguration tells you that the market disposition or expectation from the government is high.
Right.
Because during the campaign and before the campaign, we've seen that the team have shown, or the president have shown, elect have shown, yes, that it's a pro-market, and at the same time, his position of the market is positive. That means policy to drive the market and the economy are already in pipeline. These expectations are put investors taking advantage of the low price, seeing also the first quarter result of many companies, and also low price because of a markdown for dividend become attractive for investors to position ahead of this inauguration. Because I believe that policy statement that will start from that May 29, and also the kind of appointment we're going to see will further boost investors' confidence. But the good thing again is that this is the payment period for dividend. Liquidity are coming back to investors, and now that to reinvest such liquidity also to the market is also a plus. And like what you just said, that the market defied the 50 basis point hike, in NPR. Right. It tells you that markets are factored, and even the inflation that hit 22.22% last week Monday when the report was released, and also GDP that came the same day, that coincided with the same day that there was a kind of hike that same day. We saw GDP in the morning before the hike, and at the same time that was also the same day for Treasury option. We saw all the rates declining for that same day again. There's a coincidence with that, but investors took time on Thursday to analyze all this data. Why you saw on Thursday you saw market pulling back? It's not profit taking, not that the expectation
that basically profit taking,
not just expectation that something has gone wrong. they're all looking at this data that was released, the GDP, or the last MPC figure adjustment by 50 basic points. At the same time, interest rate in Treasury be declining for all the tenor. 91 days, 180 days, and that investor to relax and report. I'll still tell you that institutional investors, they are not quick in jumping into positions. They are still looking at those data, and from next week after the inauguration, we know where they are going. But the small investors in the market are quickly come back to see that the impact of that 50 basis points will be to the detriment of the economy, but to the favor of the banks. You can see that today. Look at all the banking stocks, whether the small or big are in the green. It tells you that people are taking a position because they know that this will also further boost bank performance at the expense of the economy. But I believe that for those that are in the market and looking at which service sectors that supported the GDP, because if you look at the GDP figure, it's more of service sector, not oil producing sector that supported that 2.31 growth or so. That's why it was a slowdown from the previous quarter and also for the previous quarter in 2022. But I believe that this is what's guiding investor. For me, like you just said, the market is still very, very strong because money flowing there. So I feel that funds are strengthening the market. For that, let's wait and see what the outcome of the inauguration will be.